Hi, this is Stuart Cooper, and today we're going to talk about when do you lock your interest rate on a mortgage? What is the ultimate time so that you can save the most amount of money? Because let's face it, when you're buying a house, there's a lot of expenses, and closing costs, and you want to try to maximize your opportunities to get the best rate at the lowest cost possible. So what we're going to do is we're going to go over rate locks on how you should be doing this when you're going to get a mortgage. So first thing first, let's assume that the first thing you really should look at is you really want to have a house under contract. You want to have a signed purchase contract so you know what the closing date is of the purchase. And the reason for that is because when it comes to locking an interest rate, we got to refer to the contract to see if you have a 30-day escrow, 45-day escrow, 60-day escrow, and that's going to determine how far out we need to lock the interest rate, because the further out you lock the interest rate, the more expensive it gets. So a 30-day lock will be cheaper than a 45 and 60-day lock. Now the next thing, this is actually the part that is probably the most understood. So what I want to tell you is you need to educate yourself about what the markets are doing, the economy. You want to know what mortgage-backed securities are doing, or you want to be talking to somebody that knows what's going on in the market, because that's going to improve your odds of getting a better interest rate or reducing your closing costs. So we're going to walk you through that real quickly. And basically the end of this video is what we're going to show you is how you can literally save thousands of dollars on your mortgage by doing this correctly and asking the right questions. How you save money on when it comes to locking your interest rate. So right now what we're looking at a website called MBS Live. This is a subscription live feed service for mortgage-backed securities, and it gives me a lot of really vital information when it comes to what the markets are doing that affect interest rates. So when you're talking to different lenders, you want to ask them, how do you decide on when it's a good time to lock the interest rate? Because for a lot of you might have had this experience if you purchased a home before or refinance. You call your local lender, they give you a couple options, and then you go, oh, I'll go with plan A. So just looking on this website real quickly, I can see that, okay, it looks like rates are starting to look more negative than positive. So likely there's a little bit of tendency for rates to get worse before they get better, just by looking at this one simple tool. That right there tells me it might be better to lock now than later, just based off of that. But then we go a little bit deeper as we look at what the economic calendar is. We want to know what's coming out as far as which can affect interest rates. And if you think about it, it kind of makes sense. What information can be coming out that could affect your mortgage for the rate going either getting better or getting worse? Like here's a perfect example. Tomorrow morning, the core CPI, Consumer Price Index, comes out. It's estimated to be at 0.6. Now, if this goes up, rates are going to dramatically jump up tomorrow. Now, if this number improves, rates will get better and we'll get a good little rally. But we don't know that information yet. So all we can do is make an educated guess. So the next thing we're going to do is I'm going to share with you what these charts are. So here's a 10-year treasury. That's one way. That's one indicator. It tells us what way the markets are moving. And then we have the actual mortgage-backed securities, which is another one. But we're going to actually focus on the 10-year treasury now. And I'm going to point something out to you on how we look at locking the rate actually. So now let's take a look at the 10-year treasury. So what we're looking at right now is this gives me an indication of where rates are heading. So what we want to do is we want to lock at the bottom of down here somewhere. This is where the rates are absolutely better. And depending on the market, this could be improved pricing or it could actually lower your interest rate. But it's kind of hard to look at one day. Let's see, what's that? Let's go at 1 month. Okay, here's a perfect example, okay? So let me just I'm going to draw two lines. I'm going to draw a line right here, because the market goes in what they call channels. So you'll see that the rates, they trade in a narrow range of channels. And what we're trying to do in this particular situation is down here at the bottom of a channel, we want to lock. This is where the pricing is optimal. So what happens is when I'm looking at an interest rate for a client and we're looking at locking opportunities, I'm looking for us to be down here. And I know that it's going to most likely stay within this channel. So this is a good locking opportunity here. Here's a better opportunity, and here. And you can definitely see over the last couple of weeks, this was a downward pressure. So the market was improving and it was following the channel. And by looking at this, it gives me an idea where rates are possibly going and where we want to avoid locking the interest rate, because the difference between here and here could be considerable. It could be a difference in the rate or the cost of the loan. So you really want to be aware of that. And here's another example is what we look at resistance levels. So in the past, we talked about where I thought rates, we got to be really careful. And here is a resistance level right here, because we always were bouncing off of it. And you can see here in the last week or so, we definitely got close to it and we bounced off it and rates got worse, right? So we saw this downward market opportunity. So I was advising all my clients to lock in the interest rates as we were following this down. And then when I got to here, I said, hey, you better be really careful about this, because we could bounce off of this. And that's exactly what we did. So when you're thinking about buying a home, and you're having that conversation with the loan officer, you might want to ask them, how do you know when to lock the interest rate? All right, guys, have a great week. Take care.